In our previous module, we learnt about accounting equation. Let us see one example in this module. So just to quickly check up our understanding, accounting equation is nothing but assets equivalent liabilities plus owner's equity. So when we say assets, we mean the cost of resources used in the business. When we say liabilities and owner's equity, the resources supplied by creditors, lenders and owners. So assets basically means what we own, liabilities are what we owe to outsiders, owner's equity is what we owe to our own owner. So with this basic understanding, we will now get into the example. Ram Charan deposits rupees 25,000 in a bank account for Soft Corner. Assume Soft Corner is nothing but the name of the business. The Ram Charan is the owner and he gives 25,000 rupees capital to the business. Now how the accounting equation will change because of this transaction? Please understand, whenever we get a transaction, first check is it financial or non-financial. Obviously, all my transactions here in this example are financial only, but still we have to cross-check. Will it affect the financial position of the business? Yes. How? Asset side will go up in the name of bank account by 25,000 rupees. Parallelly, owner's equity will go up in the name of capital account. To be more specific, Ram Charan's capital 25,000. So we see here assets going up and the owner's equity going up by the same amount, so your equation is matching. Similarly, we will pick up other transactions and see how it works. Soft Corner buys land for 20,000 rupees. So what will happen to the equation? Your assets will go down in the name of bank by 20,000 because whenever we buy land, obviously we have to pay 20,000. So your assets will go down by 20,000 in the name of bank account. But parallelly, your assets will go up in the name of land account by 20,000. In simple words, land is coming in, money is going out of bank account. Dual aspect concept. Something coming in, something going out. So again, the total of assets will be equivalent to total of liabilities and owner's equity. Number 3. Soft Corner buys supplies for 1,350 rupees, agreeing to pay the supplier in the near future. Can you guess how the accounting equation will be affected? Your asset side will go up in the name of supplies account. When I say supplies, you can assume it as office supplies, like the office stationery items, papers, pencils, marker pens and all those that we use. Once we buy them and keep it in the office, it is an asset. Later, when you keep drawing them for usage, it becomes an expense. As of now, we treat it as an asset. So one side of the story is over. What is the other side? Because we are not paying money, we are creating a liability in the name of creditors. Who are creditors? From whom we buy goods and services on credit. So assets goes up in the name of supplies, liabilities goes up in the name of creditors. We can also call this creditors as accounts payable, trade payable, In different books, you will find different jargons being used. The next in line, Soft Corner earns fees of rupees 7,500 by check. So obviously, if we receive the check, what we do? We go and deposit that in our bank account. So can you imagine what will happen to our accounting equation? Assets will go up in the name of bank account by 7,500 rupees because we have deposited the check in our bank account. Parallelly, what will happen to the other side? Look at this word here, fees. We are earning fees. Whenever we are earning fees, it's nothing but an income for us. So when I say income, what will be the other area that will be getting affected in our accounting equation? You can find owner's equity going up in the name of fees earned. If you remember the accounting equation module we saw, any income will increase the owner's equity and any expense will bring down the owner's equity. So again you find your accounting equation getting matched. Now this transaction talks about so many expenses like wages, rent, utilities and miscellaneous. Can you guess how your assets and liabilities and owner's equity will get adjusted? Obviously, when you pay for all this expense, your bank balance will go down. So assets will go down in the name of bank. Parallelly, what will happen the other side? Because all these are expenses, definitely your owner's equity will go down in the name of these expenses. So your accounting equation holds good again. If you remember long back, we purchased supplies on credit. So now we are paying 950 rupees to our creditors. So what will happen to the equation then? When we pay, obviously assets will go down in the name of bank. Having paid our creditors, we can't keep the creditors balance same. We have to bring them down. So deduct, bring down by 950. So both assets and liabilities are going down by same amount. At the end of the month, cost of supplies on hand is 550. What's the meaning? Sometime back, if you remember, we purchased 1,350 worth supplies. But out of that, only 550 worth is left now. So what has happened to the balance? The difference of 800 rupees supplies we have consumed. So how to account for that now? When we say we have consumed, obviously it is a financial transaction. So your accounting equation should get adjusted to that. Let us see how it gets. Your supplies will go down by 800. So your assets will go down in the name of supplies by 800. And once we have consumed this, can we call this as an expense? Obviously. So your owner's equity should go down. So your owner's equity will go down in the name of supplies expense. So your assets and liabilities plus owner's equity is matching again. I repeat, whenever we buy supplies, initially we will treat it as an asset. But as and when we start consuming that, it becomes an expense. When you fully consume it, your assets will become zero and fully get converted to expenses. Ramcharan withdraws 2000 rupees from bank. Please understand, Ramcharan is withdrawing, so we can safely assume this as drawings. Then how the accounting equation will get adjusted? Obviously, when he draws money, your bank balance will go down. So assets will go down in the name of bank account. Parallelly, owner's equity will go down in the name of drawings. We have learnt earlier in the equation, whenever owner gives money in the name of capital, owner's equity will go up. Whenever owners draw money in the name of drawings, owner's equity will go down. Now let us have a look at the summary. There are so many things that happened with bank account, if you can recollect. Initially, owner gives capital, then we purchased land, we spent for expenses, then we paid for supplies. There are so many transactions happen, at the end of which we are left with 5,900 rupees balance. Similarly, even though we purchased 1,350 worth of supplies because we consumed 800 rupees worth, we are left with 550 rupees worth of supplies. We got land for 20,000 rupees. These are all the assets that we have at the end of the period. We also have creditors worth 400 yet to be paid because we didn't pay fully. And look at the owner's equity. Initially, owner gave 25,000, later he withdrew 2,000. We earned fees, then we spent for other expenses. So if you take all this into consideration, we have our complete accounting equation at the end. We can total the assets, check up the total of creditors and owner's equity. We will know it will be matching. Thank you.